We added to positions a number of months ago, but we now think that we should fade the rally a bit. We've still got quite good upside Tanvir for the next 1 year, but we would expect a short-term correction, which would be a buying opportunity.
Right, and so what are you buying in this market?
The areas we prefer are US and particularly US technology. So the last couple of days of weakness, which we will expect would continue over the next week, will be a good opportunity to increase exposure there. And we also like North Asia, particularly, again, on the technology side. We like China, particularly on the ADRs, particularly in the sort of e-commerce areas as well.
One of the reasons, Sean, that the market sold off in Friday's session was, of course, tariff tensions coming back to the fore. What do you make of that story as of now? Because it's still, once again, at a nascent stage. Its priority number one is, of course, managing the crisis, the COVID-19 crisis in the U.S. But if that risk comes back to the markets, how much of an impediment would it be for sentiment and for this interest that is fueling the markets higher?
It's obviously a very serious issue. I think from sentiment-wise, it probably would damage the US market more than the Chinese market, as the Chinese market's probably more resilient and the US market's gone up further in a very short period of time. And the earnings resilience will probably be more in China than it will be in the US. But obviously on an economic basis, it's going to hurt both markets. And China actually is the only market we've got positive GDP just this year. We see by October, November that China will reach the GDP level of the end of 2019. So obviously we'd have to change our forecast if that happened.
John, I'm just trying to understand that a bit more, why you think Chinese earnings would be more resilient, because it kind of depends on what the scope and what would actually happen in terms of any tariffs that come from the U.S., right? Just how damaging it could be on the U.S. on the economy in China.
It does. I mean, but we've already got fairly bleak export, expectations in the market. So when we've seen earnings come through in China, it's mainly been in domestically driven businesses, and we would see, although further tariffs would obviously hurt the export side of the economy and weaken the overall GDP number, we would think relatively wise that the domestic area in China would still improve. And we're beginning to see that with production's back at almost full capacity, but we don't have any demand coming from abroad. But the domestic side of China is quite tepid, but it's growing.